Yeah, I think good morning, Cheryl. I think as far as Devyani International is concerned, I think the quarter one has been a little softer quarter for them. But I think the management commentary has been quite encouraging and quite confident. Our sense is that in the QSR space, Devyani International has a very good exposure in terms of their geographical reach, and I think it is headed by the Varun Beverages Group. So I think the parentage is also equally strong, and if the investor has a time frame of at least 12 to 18 months, I think we are pretty confident that the QSR space will see a strong bounce back and obviously will benefit Devyani International. So from my side, it's a hold. Typically, the time frame should be at least 12 to 18 months. As far as Everest Kanto is concerned, it is one of those companies which is into CNG cylinders. And I think the company had a very disappointing performance for the last couple of quarters. The stock has bounced back, from lows of almost 65 to 70 rupees to now 110 odd rupees. We believe that going forward, most of the teething troubles in terms of the demand issues, in terms of the ramping up issues, have got sorted out. So I think the investor can wait here for another 6 to 12 months. We believe that obviously FY24 should be a lot better for them, and I think it's a hold from my side, provided the investor has a time frame of at least 8 to 12 months from now on. SBFC is a leading non-banking finance company, largely operating in the MSME space. They enjoy a pan-India presence, and I think the best part is, it is headed by a very prominent management team. The ex City bankers, ex HDFC Securities kind of executives who have come on board. Our sense is that the MSME space offers a very strong growth opportunity. The IPO price was at 57 rupees. The stock got listed at around 88 to 90 rupees. So I think, if the investor has a couple of years in mind, he can definitely hope to expect a decent risk reward here. I think we need to get better, more numbers from the company's, financials, from the company's corporate commentary going forward. And once that happens, you're going to see a positive traction coming in the stock because the tailwinds in this sector are quite promising. So I think I would suggest him a hold, but keep a time frame of at least 12 to 18. I think, Shrishti, from the chemical, especially the specialty chemical space, we believe that, the headwinds in the sector are quite strong. Most of the specialty chemical companies, including Anupam Rasayan, if we see the numbers, quarter one for FY24 has been quite disappointing. And I think this is largely because of the fact that demand has contracted. There has been a lot of commodity raw material cost push pressure. So I think, at this point of time, I would suggest that it's better to wait for at least a couple of quarters before one makes a fresh entry into Anupam Rasayan. As far as the other chemical companies are concerned, I would believe that it's better to wait for a couple of quarters because this space has become interesting in terms of valuation, but in terms of growth, I would believe maybe another one or two painful quarters are still awaited, and after that, one could definitely cherry pick and go forward. But I think within that, Gujarat Fluorochemicals and Navin Fluoro definitely look interesting, but at lower levels.
So
Both of them are textile players. In fact, as far as Arvind is concerned, they should benefit because of lower cotton yarn prices. And I think they are a large exporter of finished garments as well as, value added kind of fabrics. So I think that is definitely going to benefit Arvind in the coming 12 months. Our sense is that the fall in the yarn prices has been significant, and this benefit could get reflected both in margins as absolute profits in the coming year. As far as Jindal World is concerned, they have now decided to diversify into electronic technology, specifically drones, and which looks quite interesting. But I think it's an unrelated diversification. As far as their core business of denim is concerned, it's doing pretty well. So I would believe that in both these stocks, it's better to take a kind of a hold decision for the next 12 to 18 months. My sense is Arvind would do a lot better as compared to Jindal World. I think, most of the negatives are built into the price, but I think in terms of the earnings recovery, one could expect some recovery only from the second half of financial year FY24. And I think the management is pretty hopeful that the overseas markets and especially markets for contract research would get scaled up significantly in the second part of the financial year. So I think if he has a 2-year horizon, he could definitely do a small SIP at the current level, and obviously take a time frame of at least 12 to 18 months. I think from a longer term perspective, I think Kotak Bank should be held on as a portfolio stock. I think the stock has underperformed other private sector banks, but that doesn't mean that the bank has not been doing well. In fact, quarter one FY24 has been pretty impressive. Asset quality, loan book growth, and the bank's commentary has also been quite encouraging. So I think the investor needs to give in some more time, but I'm quite sure that the stock has the potential to bounce back, considering the fact that credit growth in the system is pretty strong. And I think that would help Kotak Bank to increase its balance sheet size, and obviously the kind of fee-based activities it does, it's also going to aid the bank going forward. So it's a hold from my side, but keep a time frame of at least another 12 to 18 months.
Pinolex Cables, Godavari Power, and Indian Hotels.
Yeah, I think Indian Hotels is also one stock where I think the investor can obviously accumulate some more quantity either at the current level or maybe at a slight correction. We believe that the next 2 years are going to be very promising for Indian Hotels, considering that the G20 summit is going on. The World Cup happens in October this year, and I think there's a lot of appetite for travel and tourism in the country. So I think Indian Hotels and Mahindra CI, the two companies, I think one could accumulate. The other companies, I think he can hold on. These stocks have appreciated quite significantly, and at these levels, I wouldn't suggest him to buy or add at these levels. Maybe on a correction, he could definitely look at adding their positions further. Now, I think even at the current level, Shristi, I think HDFC Bank looks pretty attractive. My sense is that within a range of 1550 to 1595, I think it's a good price to accumulate. My sense is that over the next 2 years, you could see growth coming back again. And with consolidation happening now between HDFC and HDFC Bank, we would be seeing consolidated, financials, possibly from the September quarter onwards, and that definitely is going to drive the valuations going forward. I think overall, if he has a 12 to 18 month kind of time frame, I think he should expect a decent risk reward. Okay. Yeah, I think the entire agrochemical sector share has gone through a crisis. A lot of inventory destocking has happened, and that has impacted, Sharda Cropchem. My sense is that, if we can hold on for the next 12 months, because normally most of the agrochemical companies, have a profitable period in the first half of financial year. My sense is that despite the fact that Sharda Cropchem, has a large, export base also in Latin America and Europe, it's better that he keeps a 12 to 15 month horizon. The company has the potential to bounce back. But I think in the very near term, there are no major earnings triggers which could drive the price. So I think keep a time frame of at least 12 to 15 months. And I hope that in the next 12 to 15 odd months, he could definitely expect a decent risk reward. As I mentioned to you, agrochemical has been going through a very painful inventory destocking kind of environment. At least for the next 1 or 2 quarters, I think we could see continuation of some more pain. So I think this may not be the right time to actually chip in into United Phosphorus as of now. I would believe it's better to wait for the September quarter, and after that we could take a fresh review. So I think at these levels, completely avoidable despite the fact that valuations have become attractive. Possibly there could be some more pain for a couple of quarters ahead. We should hold on. JK Cements, I believe, has corrected mildly, but I think if you look at the cement market, I think a lot of pricing power has started coming back again. We expect a very strong second half of FY24 for most of the cement companies, including JK Cement. So I think keeping a time frame of at least 12 to 18 months, I think he should stay invested here. From a long-term horizon, see, Campus Footwear is one of the leading sports manufacturer of footwear in India. Have a pan-India base, but I think if you look at the IPO price, it's come down even below the IPO price level. And I think this has been largely because of some poor, disappointing numbers for the last couple of quarters. But I think long-term prospects seem to be quite strong. If the investor has a 12 to 15 month horizon, I think this could be a good entry point. But he has to at least keep a time frame of at least 12 to 15 months. We expect better numbers from the second half of FY24 onwards. This is a stock which is largely into the ARC business, and I think has a very small exposure on the domestic kind of business, especially the broking business. So I would suggest that the scale of opportunity for growth is fairly limited. So it's better to hold. I would not try to enter the stock after a 14-15% rise. So I think it's a hold from my side, but no fresh buying is advised. I think, Sundram Fasteners is one of those companies where a lot of wealth creation has happened over the last 5 to 6 years. My sense is the management quality is top class. The products are also well established, and they're not only into fasteners, they're into engine components. I don't think the electric vehicle regulation is going to impact their business significantly in the very near term. So I think somebody who's got the next, say, 18 to 24 months in mind can definitely, start an SIP in the stock. Our sense is that we could easily see levels of 1400, 1450 once a strong recovery happens. But I think you need to keep at least a 2-year view time frame, when you consider this kind of stock in your portfolio.